Hey, what's up, everybody? Chris Burns, aka Burnsy the Realtor here. As I'm sure you've probably seen in the news, the Fed dropped their interest rate 2 days ago by 0.5 percentage point. Today, we're talking about how that affects or doesn't affect mortgage rates. And before you start tuning out, stick with me. I'm going to make this simple. So does a Fed rate increase or decrease affect mortgage rates? Well, the first thing you should know is that despite the Fed stating multiple times over the last 12 months that they were going to decrease the interest rate, the last time there was any movement in either direction, up or down, was last July 2023, a full 13 months ago. Since then, I personally have seen rates as high as 8.4% and as low as 6.2%. That's a 2.2% swing, with the Fed rate staying at the exact same rate. The big question I hear a lot is does that federal interest rate set mortgage rates? Well, yes and no. The federal rate impacts things like short-term loans and credit cards, but mortgage rates are more influenced by inflation and economic growth. So while the Fed does have some influence, mortgage rates don't just jump up or jump down whenever the rate adjusts. Now, let's talk about what actually does affect mortgage rates. Number one, inflation. When inflation rises, so does mortgage rates, because mortgage lenders have to account for the decreasing value of money over time. Next is economic growth. If wages are rising and unemployment is low, people can afford to borrow more, so lenders might raise rates. Speaking of unemployment, that's another factor. If unemployment is high, mortgage rates can drop because the Fed wants to stimulate the economy. When unemployment is low, rates can go up as more people are in a better position to buy homes. So if you're thinking about selling or buying a home, those are the factors to keep in mind. It's not just about what the Fed is doing, it's about the bigger economic picture. A good rule of thumb is, for sellers, if your home is too big or too small, no longer meets your needs, don't let what you think the rate might do keep you from a home that better fits your needs. Good rule of thumb for buyers is, if the home meets all or most of your needs and the payment falls in your budget, buy the home. If you've got any questions about how this affects your home selling or buying plans, please call or message me 440-689-3144, or you can email me at chris@burnsyrealestate.com. That's all I've got today. Thanks so much for tuning in, and I'll see you in the next video.